Hey everyone, and welcome. Today, we're going to learn how to read the secret language of the market, candlestick charts. Seriously, by the end of this, you'll be able to glance at a chart and actually understand the story it's telling. So, let's jump right in.
Okay, take a look at this. At first glance, it probably looks like a chaotic mess, right? Just a jumble of red and green bars. But what if I told you this chart is telling a super dramatic story? It's a blow-by-blow account of a massive battle between buyers and sellers. And the big question is, who's winning?
To read that story, you first have to learn the market's alphabet. Every single one of these little candles is like a letter. And once you understand what each letter means, you can start putting them together to form words, then sentences, and before you know it, you're reading the entire story of the market.
So let's start at the beginning. Before we can get into the epic tales of market trends, we need to break down the building blocks, the anatomy of a single candlestick. Think of this as lesson number 1 in the market's alphabet.
First up, the green candle. You can think of this as the good guy candle. It's also called a bullish candle, and it's a super clear sign that the buyers are winning. For any green candle, the price opened at the bottom of that thick part, and it closed at the top. It's that simple. Green means the price went up during that period.
And on the other side of that battle, you've got the red, or bearish candle. This is your signal that the sellers were in charge. And notice, it's the complete opposite of the green one. The price opened at the top of the body and got pushed all the way down, closing at the bottom. So red means the price went down.
Okay, let's put them side by side because this is the absolute fundamental concept you have to get. Green opens low, closes high. Red opens high, closes low. Getting this simple difference down is the key to, well, everything else. It's the basic grammar of these charts. Now, what's the deal with those skinny little lines sticking out from the top and bottom? Those are called wicks, or sometimes shadows, and they tell you the rest of the story. The wicks show the absolute highest and lowest points the price hit during that session, even if it didn't stay there. It reveals the full territory of the battle.
And then sometimes, you'll see this little guy, a candle with a teeny tiny body, or sometimes no body at all. This is called a doji. And what a doji tells you is that the open price and the close price were practically the same. It's a sign of pure indecision. Buyers and sellers fought, but in the end, it was a draw. Nobody won.
All right, we've learned our letters. Now it's time to start forming some sentences. When you string a bunch of these candles together, they start to reveal the market trend, basically the direction the main story is headed. Let's see how that works. When you see a chart that kind of looks like it's climbing a staircase, making higher peaks, we call those higher highs, and higher valleys or higher lows, then you're looking at an uptrend. This pattern is telling you that the buyers are consistently in control, pushing the price up wave after wave. They're winning the war, not just the little battles.
And as you can probably guess, a downtrend is the exact opposite. This is a clear signal that the sellers are dominating the market. You'll see this pattern of lower peaks and lower valleys. It looks like a staircase going down. Each attempt to rally gets shut down, and the price just keeps getting pushed lower. The sellers are firmly in control here.
But you know, no story just goes in one direction forever. The most dramatic and important moments in the market are the plot twists. Those points where a trend just runs out of gas and starts to reverse. Being able to spot these moments is an absolutely critical skill.
So how do you spot an uptrend that's about to fall apart? Well, you want to look for a few key signs. First, the pattern breaks and the price creates a lower low. That's a huge red flag. Another sign is when it makes that lower low, tries to recover, but fails, forming a lower high. Or sometimes the trend just gets tired and makes a lower high first, showing it doesn't have the strength to make a new peak. Any of these are clues that the buyers are getting exhausted.
And that same logic works perfectly in reverse for a downtrend that's about to turn around. It might be ending if the price suddenly gets a burst of strength and makes a higher high. Or it could make that higher high, pull back a little, and then hold its ground with a higher low. Sometimes the selling pressure just dries up and you get a higher low first. These are the first whispers that buyers are starting to take back control.
Okay, so we can figure out the direction of the story. But what about the intensity? How powerful is the move? Let's talk about how to measure the market's strength, or what we call momentum. This tells us not just who's winning, but how decisively they're winning. Strong momentum looks clean. The price movement is tight and decisive. You don't see these wide, sloppy swings back and forth. That tells you one side is completely in control. Another huge sign is when you see the bodies of the candles getting bigger and bigger. That means the price is moving farther and faster in each period. It's a market that knows what it wants.
Now, momentum loss is like a warning light on your dashboard. You'll start to see things get messy, with wide swings as the other side starts to fight back. You'll also notice the candle body shrinking, which shows there's less conviction in the moves. And a really big clue? A sudden change in candle color after a long streak, showing the dominant side tried to push and failed.
So here's the main takeaway, the most important thing to remember. A candlestick chart is so much more than just data points on a screen. It's a dynamic, visual narrative of market psychology. It's a real-time story of greed and fear, of strength and indecision all playing out right in front of you.
We've given you the alphabet and some basic grammar. You can now look at a chart and actually read the story that it's telling. So as you look at the markets tomorrow or next week, ask yourself, what new chapter is about to be written? What story will the market tell next?